In this video, we're going to give you the hack on how to trade successfully using a Fibonacci tool indicator. We left no stone unturned. We want to give you complete clarity. So we're going to take about an hour of your time to break this all down, okay?
Are you serious?
Am I serious? I'm asthma attack, heart attack serious. Are you serious? Do you seriously believe that someone going to teach you how to make money and grow your account in about 2 to 3 minutes? You're sadly mistaken. Know that there is no 5-minute shortcut to wealth. If there's anyone out there telling you how to grow your account substantially in a 5 to 8 minute video, 9 times out of 10, there will be a lot of missing parts and unanswered questions because the whole goal for them was just to get you to click. They're not trying to help you. They just want to help themselves. Here at Forex Fundamentals Pro, we provide value-added content. We're here to make a real difference. So if you're looking for a shortcut or a quick fix or a gimmick, this lesson is not for you. You could kindly exit stage left.
This bitch can't be serious.
Ho, 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 ho. We will not tolerate disrespect and potty mouth, profanity. Bye, Felicia. You clearly don't appreciate what we came to do here. Matter of fact, the guy back there in the suit, he can go too.
What? But you can't do this to me. You know how much I sacrificed?
You don't understand how much we sacrifice. So the feeling is mutual. With that being said, everybody else who's left, by all means, I need for you to follow the step-by-step process so that you can get this. All right? Step 1, get out a pad and something to write with. Go get yourself a pad and something to write with. Don't use your phone to write in the text notes. Get out a pad and a pencil so you can draw out what we're talking about. You could take some copious notes. We want you to get clarity, okay? We want you to get clarity. Okay. Step 2, I need for you to take a look at something. Help us to help you. Take a look at this. Here we have a chart with a white background. And here we have another chart with a black background. Let us know which chart is best for you to learn from, which is clearer to see. Is it the white background or is it the black background? Now, we want you to pause this video, but not just yet. And we want you to go in the comment section and type in white background, let's go, or black background, let's go. And before you do, I want you to think about something. I want you to look in the comment section and I want you to look at the view count of this video. In a perfect world, the number of times this video was viewed should be equivalent to the number of times the like button was smashed and the number of comments that you see in a perfect world. But there is a proportion of people that came to this video and clicked off when they discovered how long it was. They said they don't have time for this. There was a number of people who figured that they would come back later on and watch it because of the length of the video. They may have, they may have not. But there's likely to be more views of the video as far as the view count than there are of the people that press the like button and comment in the comment section. If anything, there should be the same number of comments as there are a number of likes. Why am I pointing this out? Because this is part of the reason why many people do not succeed in trading. See, it's known that the note takers are the money makers. And the best traders were the best students of the game. We also know that it pays to be patient. Many people fail at all three. They don't take notes, they don't take direction, and they lack patience. Those who do, they have success and great success. It's also known that the road to good, to greatness, to wealth, to righteousness is narrow and straight. But the road to destruction is wide. It's easy to go down. So take that into consideration as we move further. So you can now pause the video and type in the comment section whether the white background is best for you or the black background is best for you. And type in "let's go" and smash that like button and come back to the video. Now, if you follow through, I want to take a moment to give you a hand clap. And you should pat yourself on the back because know that you are cut from a different cloth. You are cut above the rest. See, you now tapped into the third of your five senses. See, we have five senses, and we must employ all five senses to get the full experience. You must use your ears to hear, your eyes to see, your mouth to taste or to speak, your hands to touch, and your nose to smell. To become great at trading, you cannot lean on just two of your five senses. In other words, you cannot become great by just watching and listening to videos. And many people fall for that. So far, you use your ears to listen when you went and grabbed yourself a notepad and something to write with. You use your eyes to see the two background colors to make a choice. And you use your hands to type in the comment section and smash the like button. Now, let's use our mouth to say, "I'm ready." Are you ready? Say, "I'm ready." Let's say it again. Say, "I'm ready." Now take a deep breath. Let it out slowly. One more time. Take a deep breath. Let it out slowly. Do you smell where Forex Fundamentals Pro is cooking? Let's go. Welcome to Forex Fundamentals Pro, where we not only educate you, share trading strategies, we also offer optimized tools to give you a real edge in the market. So let's get started. Okay, now we're back. On your screen, we have a financial instrument with a black background. And we also have it with a white background. Now, we are people of second chances. There are some people who haven't commented and let us know which look better on your eyes, which is easier to see. So in the future, as we share these free lessons, we'll know what are you getting better readings on, better clarity, better sight, understanding, etc. So we have white background and we have a black background. Please let us know. Your feedback is highly important. Okay. Now, for starters, we're using this black background. We'll get over to the white background. We have the Fibonacci 2 indicator on our chart. And this is the FFP, Forex Fundamentals Pro, Fibonacci and Retracement indicator. Okay. The difference between this one and the one that comes with your platform, we're on Metatrader 5 right now. We have an indicator for Metatrader 4 and 5. But on your platform, you have an indicator right here, draw Fibonacci retracement, which you can drag out on your chart, as you can see right here. And the difference between the two is that this particular one that comes with your platform has no extension levels. So let me flip it around so we can see the difference. Okay, down here, we're starting at the 100% level. Let's zoom in a little. Probably still hard to see. But right here, we're at the 100% level, 100% level. And we go up to the 0. And we go up to the 0. Now, if we were to have what we call a retracement or pullback, let's say we're looking for price to trend upward. We're going to lock this in. We were looking for price to trend upward. Price was trending upward. And made it to our zero level. And let's say it retraced and pulled back. Even if it pulled back to the 100% level, when using Fibonacci, we need a destination, which is called the extension levels. We need the extension levels. So if we do the same thing over here with the Forex Fundamentals Pro Fibonacci, we're going from the 100% level to the zero level. We had a retracement, price pulling back, let's say to the 100% level. We need the extension levels, meaning that once price breaks past this 100%, the 0% level, it's going to the 23.6 upwards towards the 61.8. Okay. So your default indicator on your Metatrader 4 and Metatrader 5 platform doesn't come with the extension levels. Okay. So that's a big difference. So we're going to use our FFP indicator. Some additional benefits, we'll add another one. Once you add the indicator to your charts, you'll see these two buttons on the bottom right. One says Fibonacci, one says delete all, meaning that you can add additional indicators to your chart, and it starts in a downward trend direction, as if price was starting at the 100%, falling down, then pulling back up to a retracement pullback level, and then down to an extension level. Okay, well, let's just keep that in mind. But we can actually go in here to the properties, and if we wanted to have multiple Fibonacci tools on our chart, we could change the color. Let's say we make this one magenta, and we want to make the bar, let's say aqua. Want to make it a little thicker. We want to make our levels a little thicker. We can. So now we have this Fibonacci tool for if price was trending down and want to measure the retracement or the pullback. We have this Fibonacci. Price is going up. We can always flip this one over like that. And this is for a downward trend direction. We can flip this one over like this, and this will be for an upward trend direction. And the numbers will automatically adjust the retracement levels as well as the actual price points within the brackets will adjust as you move the Fibonacci around. Okay. Now, if you wanted to, delete one of the indicators, you can lock in one and just hit delete to delete the other one. Or if you added multiple Fibonacci's on your chart, you can hit delete all and they all can go. Okay. So that's the Fibonacci tool. And this is a tool that you must have in your trading arsenal. You must have this tool in your trading arsenal. Okay. So now we're going to go over to the white background. Hopefully it's not too hard on your eyes from looking at the black background. And we're going to step through this hack to use the Fibonacci tool. Now, built inside your Metatrader 4 Metatrader platform is a free indicator. It's a free indicator, and it's called the zigzag indicator. The zigzag indicator will go out and identify the highs and lows on any time frame of your chart and draw them out. So we're going to add, in addition to the FFP Fibonacci indicator, we're going to add the zigzag indicator. So to add the zigzag indicator to your chart, go to Insert, Indicators, Custom, and down, you have to scroll down, hit the down arrow if need be, and select zigzag. Now, the zigzag indicator by default will be a red line. In this case, we want to, let's say, change the color. Let's say we'll choose something that hopefully we can see clearly. Let's say, let's see what dark orange looks like. We're going to make the line a little thicker. Let's say 4. Let's see what the dark orange look like. Okay, that's not so bad. Okay, so we're going to use the dark orange zigzag, and it's going to draw some highs and lows throughout. Okay, now when using the Fibonacci 2 indicator, it's best to use it on a higher time frame. Now, there are people out there that are scalpers, and they want to use Fibonacci on the 1 minute, 5 minute, upwards to the 1 hour time frame. We recommend using the Fibonacci 2 indicator on a 4 hour and higher, 4 hour daily, weekly time frame. We're currently on a 4 hour time frame, and we're looking at ACAD, okay, AUD-CAD. But it doesn't matter what instrument you're looking at, the concept is still the same. Now, when you add the zigzag indicator to your chart, as you can see, it will identify some high points and some low points, high points, low points, high points, low points. And what you're looking for is you're looking for what we would call the breakout. Okay, we're looking for a price to break out. Now, I'm going to type in here the components of price that we use when we're using the Fibonacci. Okay, we're looking at the breakout. Add that to the chart. I'm going to show you what the breakout represents. We're going to use the called the retracement. And we're going to use, we call the continuation. Okay. Let's lock these in. So what you're looking for is you're looking for price to, or let's say the zigzag line, to break out past the highest point if price is trending up. For price to be trending up, we need to be having higher highs. This is a high, this is a low, this is a higher high, this is a higher low, this is a higher high, this is a higher low. So we see price trending up, we're seeing higher highs and higher lows. Okay, so what is the actual breakout? If we come here and we're going to use, let's make it a red line just to represent resistance. So we look at this red line right here. We'll see how price actually broke out past it, that high point at resistance level. It broke out past it. So that's the breakout. And then there was a retracement. Price went as high as it can go at that point in time, and there was a retracement. And price will retrace till it finds support. Okay. Price will retrace until it finds support. And it's likely to find support at a key level on the Fibonacci as well as within price itself. So we're going to zoom in so we can see a little bit better. So I see I have a typo. Right here, this is where there was some support with price pullback, have a bearish candle then pushed up. So there is a support area right here, a little bit of support. And as you can see, price pushed up, came back to that area. But where does the Fibonacci 2 comes into play? I'm going to bring this over here. What you want to do is after price breaks out, and it starts to come back, to the area from what it broke out from. What we want to do is we want to take our Fibonacci 2 down to that low point before price broke out. Okay. So we're going to trace this out for you. So down here, this is the run. This is that continuation run, or some may refer to it as the impulsive move or the indication. So this is the breakout. This is the impulsive move or the indication of the direction that price would like to go. So price pushed up higher than the previous high. Now it's retracing, it's pulling back. And again, we're on a 4-hour time frame. So these are 4-hour candles. It's going to pull back to a support level. As price is pulling back, we got some type of reversal signal, engulfing bearish candle. If we are in an uptrend, engulfing bearish candles, price is pulling back. Then we want to pull out our Fibonacci tool, and we want to place it at the low from where price pushed out from to the high from where it started to retrace. So as you can see, we have our 100% level down at the bottom, and we have our 0% level at the top. So if we're going up, we're going from 100 to 0. Okay. So A is 100, B is 0. Okay. And then C will be the retracement, the pullback. And we would like to see where it pulls back to until we get a reversal signal. Now, this area between the 50% level and the 61.8 level is considered the golden zone. Okay, it's considered the golden zone. It's where price is highly likely to retrace to and reverse. That's a key area, key level. Okay. Now, some ask, where do I put my Fibonacci? Do I put it at the wicks of price, or do I put it at the body of price? Let me show you what I'm referring to. Right here, you see the black line to the 0%. So on the body of the candle as price pushed down. Right here, as price is pushing up, we at the body. Okay, we at the body. When you're placing trades, I would recommend you place your Fibonacci indicator tool at the bodies, at the close, of the candles, the open and the close of the candles. So it's the open of the bullish candle, and this is the close of the bullish candle, or the open of the bearish candle. At the open and close, the tops and the bottoms. That way you can increase your percentage of actually hitting your take profit without price getting close to it and going the opposite direction. And although it may come back, you just have to wait a little while longer. So it's advantageous to, put the Fibonacci on your bodies of your candles when you're actually placing trades. But overall, using the wicks will give you an idea of the maximum place price is looking to go. So what's important about the Fibonacci? The Fibonacci actually lets you know, based on where price retraced down to, and then reverse from a key level, key area, where price is looking far as the target. You can use it for a target. That's what your extension levels, your take profit areas. Okay. So we have where price broke out from right here. It's the breakout. We have the retracement down to a key area, ideally between the 50, 61.8. That's a key area. But down towards these levels, each one of these levels is considered a support level, can act as a support or resistance level that we're looking for price to get to. So price actually got down toward the 78.6% level, retracement. And with that, we're looking after this reversal, we got a reversal signal right here for price to push up. And this is where your entry would be at. Okay, this is where your entry will be at. Price pull back to a key level. You got a reversal signal after this breakout and retracement. Now your target, you have up to 3 targets to consider. Target 1 is back to the initial level from where price retraced from, which is the 0% level. Target 2, based on the retracement, would be the negative 27% level, whatever that price point is. And target 3, based on the retracement, is the 61.8% level at that price point. So you have TP1, TP2, TP3 targets. Okay. Now, what determines whether you should choose TP1, TP2, TP3? First and foremost is your risk tolerance. Okay. So you have to understand risk tolerance, risk management, etc. So we have our targets TP1, TP2, TP3 to consider, and those targets will be based on your risk tolerance and your risk management. But it also is contingent upon the retracement. How far price retrace back can give you a grasp on how far price is looking to push up. If price pulls back to the 50% and lower, your highest target we would recommend to consider would be the negative 27. So you have the 0% and the negative 27%. Price pulls back beyond the 50% level to the 61.8 and greater, then a target that can be considered would be up to the negative 61.8. But we would still recommend focusing on just the negative 27%. Just keep in mind it can go there. If you want to use a trailing stop and trail price, you could consider that. But the initial target would be the 0% and the negative 27. Just keep that it could make it up to the 61.8. Well, what we want to do now is we want to step through this. Hopefully you're taking copious notes. There's these components of the Fibonacci tool, which involves the breakout past a resistance level if we're in an uptrend, the retracement to a key level of support, reversal signal, and then the continuation. Okay, the continuation. Now, our target, ideally, always choose 0 to negative 27. And we're going to step through this. So we looked at now the Fibonacci tool is its own indicator, and the zigzag is its own indicator. And we're leveraging that zigzag indicator. So now, right here, after the retracement, price pushed up to the negative 27. Take profit was reached, but also right here at this level, we had a high from the retracement and price pulled back. Okay. We had a high right here from the retracement and price pulled back. So that was another level of resistance. It's another level of resistance. And price reached the negative 27. So at that point, we could look for some type of reaction at the negative 27. And what we're looking to see is, will price find support at this level or not? If it doesn't find support at this level, then we're looking for it to find support back down in this area at the previous level support. In this particular case, price found support. Okay. And then we got an engulfing pattern, got a reversal signal. We got a reversal signal. So that was our continuation signal, telling us this price is looking to continue to push up. That's what you want to wait for to see if you want to consider trading up to the next key level. Okay, so we already hit take profit here. We even hit it right here as well. And price wanted to continue to push up to the negative 61.8. Okay, so at that point, we have a third level of resistance that was created right here. Price pull back here. As you can see the pattern. Every time we have a retracement, that's a resistance level that was created. Okay. And what you want to do is, after this pullback and up to the first 27, what you could have done was stepped up, move your low to this new level that push price through this breakout area. So our previous continuation run is now our impulsive breakout indication move. Okay. And we want to raise our zero level up to there. So now we're starting from 100 back up to 0 and can measure the retracement. In this case, the retracement was to 38.2. And that's when we got that reversal signal at that support level, okay, which was negative 27, which was a support level, key level. And we was less than the 50% level as far as the retracement. Therefore, the max we can trade up to is the negative 27. So we had a breakout, a retracement, and then a continuation. We had a breakout, a retracement, and a continuation. Okay. So with the zigzag indicator in conjunction with the Fibonacci, it makes it so easy to see these pullbacks measure these retracements. So now you may be asking, well, what's next? We got up there and we can see what happened, of course. Well, we wouldn't be able to see what the future holds. So we would continue to step up, right? We got another breakout right here. Let's remove these words. Therefore, we can actually continue to follow along. And don't forget that we're always looking between that golden zone, which is between that 50 and 61.8 level. Okay. So here we go again. We have price pushing up. It broke out past this resistance level where it pulled back before. And then we got a reversal signal right here where price started to pull back. And we want to measure that retracement. Will it find support at this level? Will it find support at that level? Will it find support at this level. Okay. So price went up, it came down, and it found support right here. And then it started to push up. Okay. And in this particular case, price just made it back to level 0. Okay, just so we can see it clearly. Price just made it back to level 0. Rejected, pushed back down, and started to fall. Now, right here, at this particular point in time, price did make it to the golden zone area and started to push up, but then it rejected again. So at this particular time, you should notice that price is not still bullish. It's no longer pushing up higher. If we look at price, we'll see we have a high and, push down, and then now I got a lower high and I got a lower high. Okay. So price is starting to trend down. Now, at this point in time, you wouldn't have this downward zigzag line, at the price got up here to measure. You would just see price just falling down. That should be an indication that price is no longer bullish. It has went as high as it can. It has a double top. It went as high as it can, and now it's starting to fall. The bears are starting to take over. Okay. So what would you do? We see if price finds support anywhere else. Okay. Because right now we're in a situation where price is trying to figure out which way it want to go. Okay. Price can still pull back to this level right here, before we can consider price, what we call breaking structure. Because all of these levels right here are our swing lows, our swing highs, our swing lows, our swing high, our swing low, our swing high. Okay? Now, until price breaks a previous swing low, we're still trading upward. We're still in an upward trend. So we come over here, price did not break this swing low. It just pulled back, pulled back, pulled back. So if we were in a buy when price went up here, and we're still holding and hoping and wishing and praying that price go higher, but it's now pulling back, we actually should have our stop loss below our swing low, below our swing low, below our swing low when we are placing that trade. Because essentially, this could be 100% pullback, and price wants to go all the way up to the 61.8 level. That's still possible, so long as it doesn't break its swing low. Although it's falling, it's looking kind of crazy, it still haven't broken its swing low. So that's important to know. Okay. And price can even wick all the way down to this 138.2 and still go up high. Once it starts closing below that swing low, we know that price is looking to start trending down. Right now, this is just a major pullback. Okay. So now that we are at this level, price is coming back above this support level. We had a gap in price right here. Price got back above, and if we held our trade and we didn't get stopped out, we had our stop loss down here, let's say at this 110% level. We didn't get stopped out. Price is starting to push back up. Okay. Now we move over, and we can see price made it back to our level 0. So we will be in some profit. Price pulled back, pushed up higher. Our level of support is right here and we have a level of resistance right here. Okay, that's resistance. So we getting some rejection right there, and then price got above, and it kept pushing up and reached our -27, reached our 61.8. So we look at this breakout from this area right here, look at our retracement, and then our continuation run. That was the move. That was the move. So from there, what we essentially do is bring our Fibonacci over here, measuring this move. The price is pulling back. You know, we have a reversal signal, price is pulling back. And what I like to do is I like to go to where price actually, started its run to break out past that resistance level. This is where it pushed past the resistance level. It came up, rejected, then it pushed up and pushed past the resistance level. So in this area is where I will look to, measure a retracement. If we go back and we step through, you can see right here where price pulled back to this level. This was where price actually pushed up and retraced. Okay, now if we look at this area right here, price found support at that level. So these bearish candles are areas you can also look at, for price to find support at or near. But our Fibonacci tool is going to help give us better clarity of where price is looking to go, and that we are actually at a key level and how far back the retracement was. Price pushed up here and eventually pulled back where in this zone area. Okay. And we could actually, highlight that bearish candle and drag price across to see that. Okay. Same down here. We could drag around this candle right here and we can see that. Okay. And we got this area right here. So you can see how price found support right there. Price found support right there. Okay, now right here, we have a Fibonacci tool. Let's change the color of the horizontal bar so that we can, be able to distinguish the orange from the red a little bit better. So let's choose, see how this look up. Okay, that's better. All right, so after that long run right here, we drag price over and we can see we pulled to the -27 and price went to the -27. I mean, back to the zero for a double top. I'm sorry. When price pulls back less than 50, and let's say it just makes it to a 27 or a 23.6, this particular indicator I have on here has 23.6. I'm going to show you how to change the number. That means that, and if it continues from there, that means that this was a strong trend in that direction. It only pulled back so much and then continued to push up forward. Okay, in this case, continued to push back up forward and lost momentum. What you'll like about the Fibonacci is that it actually is adjustable. So right here, let's say I would like to move my indicator to right here, where I actually see the run where price broke out right here past this resistance level. Price pulled back to the 50, in between the 50, but not past the 61.8. This is that key zone, that golden zone area. Between the 50 and 61.8. And we're still within that same scope of, if price hasn't reached past the 61.8, it's highly likely to go to the 0 or the negative 27. And if it's below the 50, it's highly likely just to go to the 0 and negative 27. Past the 61.8 can go to the 61.8. Okay. So you want to make sure that you're using your 0 as your TP1, negative 27% extension level as your TP2, and depending on the retracement of price before it started to reverse and continue up, negative 61.8% as your TP3 possible. But you can always step up from the negative 27 or 0 if price, continue to push up. In this case, we have a double top. Again, price is pushing down. One thing you must note, which you always got to be conscious of, is marking your resistance levels. And in this particular case, price found a level of support, in a sense, right in midair where there was no support level. So you want to mark that level as well. Okay, you want to mark that level as well. So by doing so, you can identify and catch where price starts to reverse, and you can have your levels. We go back here. We started right here, breakout, came back. There was no intermediate support level that was formed. It came back to a support level. Price broke out. It came back to a support level. This was resistance now being leveraged as support. Price pushed up past resistance, came back, no new support level found. It was one that was already created and existed. Okay, so it was respecting those levels. Okay, this is an area that was common for this guy right here. Okay, so now here we just drew this line right here. Price found support and pushed up. So we had to mark that. We want to label that. Okay. Price came down here at this support level again and still not pushing up higher enough. Okay. So, but we know that price can pull down to our 100% level, right? Now, if you didn't use that level and you were all the way down here tracing the entire run, price still haven't pulled all the way back down here. Okay. But you have to be mindful of this move because this could mark a turning point for price. It's breaking a level as far as a level of support, but it hasn't broken structure. Okay. It hasn't broken structure. Okay. Price came down here, starting to push up, and it has the potential to go up to where? Where does it have the potential to go to? It pulled back to whether we want to consider the 100% mark or whether we want to consider the 50% mark. Where does it have the potential to go to? Okay. Okay. The 0% or the 27%. Okay. So let's see what happens. Boom. Take profit. We got to the 0% level. And then price what? Shot down. Shot down. Okay. And what we would do is we can drag our Fibonacci over here again, because right now price is just resisting at this level. It pulled down, to this area right here, and it's just resisting at this level. So if you see price constantly rejecting at this level, I wouldn't trade past it. I would only trade to what I can see. I see that price continuously reject at this level. Okay. So I wouldn't trade past it. So now price is coming down. And if we want to measure the pullback retracement, right now it would be at the 61.8 on this area. Still, price trying to push up a little past this area. Okay, but we can leverage this area. It broke past this level right here. As price started to push down and create different lows and highs on an downward slope, it broke out past this level right here. And look, it came back down to this level. So if we wanted to make an adjustment by moving our Fibonacci over, we're still at the same low. And we're measuring price as this, impulsive breakout move to this level right here. Because you can move your Fibonacci all around. Okay. Because we just started there. We could have started anywhere where we see a breakout just to see what price is doing. Price broke out past this level right here. It broke out past this level. And we waited for price to pull back. And if we look at where it pulled back to, it pulled back between our 50 and 61.8. Okay. We want to move it to the close of that high. We can put it here. Okay, so we have our high and our low. And we will look for it to at least get back to our zero mark. And that's just about all that it done here. Boom. So now price pull back to this golden zone area. Between our 50 and 61.8. That's what we will look for our reversal. Our stop loss is where? At a swing low. This is still support area. Then I'll swing low. So price burst up, and it could go to negative 27, 61.8. But we can see that this is a key area of resistance. Okay. So now we could have set out TP here and then wait to see what price does. Rejection, rejection. Price pushed up higher. And as we can see, in mid-air, price is finding a support level, forming a support level. Okay, so this will be a new support level right there. Be a new support level. All the points are touched right there. It's a new support level. So price is finding support at this level right here, and it's finding resistance in this area. Price broke this support level right here. It came back to retest it, and now it's pushing down. So it's respecting this level. It broke it, retested, and it pushed down. An area such as this is an area where we could consider price turning around. But we can wait. We can wait to see if it breaks this level. Okay. Got a wick, price reverse trying to push up. And essentially, when it broke and retests this level, you could either pull out another Fibonacci. And if you look at this right here, if we use our body when trading, use our wicks for measurements, price went down. This is what we got our 0, our 100. If we was looking for price to start going lower, price pull back to the 100. And this is the 61.8. So this is using a Fibonacci in the reverse, and you can just follow your diagonal to know which direction you're looking for price to go after a retracement. Price push down. This is price pushing down, price pulling back. Boom. That's just measuring. But this right here would be the breakout. You got to first see price breakout. So price created this level of support, tested it 3 times, and then it broke out. So you could have watched this whole move play out first before you're down here at your level 100 to consider, okay, well, if price pulls back, I want to measure this and see how price pull back because it has the potential to push back down to this level or lower. And if it pulls back and I'm using my Fibonacci and I'm considering my golden zone, let's say that we're down here, I'm looking for a price to reverse somewhere in this area. If we start to go higher, then we're still in an upward trend. We always want to consider and look for if we have a breaking structure, but a breaking structure signals, a change in direction. Okay. And if you can't identify it, can't see it, stay out of the market until it's clear. Okay. So write that down. If you can't identify the direction of price, stay out of the market until it's clear. Okay. So now price has pulled back to the 50. We're looking at this as the potential breakout area. Okay. Down here, the bottom of the zone. This is a breakout area. Price retested it. It came back to retest it again. Okay. So it's finding this as resistance now, just like when we were trading upward, it was finding the retracement levels as support. Now we're finding the retracement levels as resistance, and we're in between this 50 and this 200. Okay. So coming over here, we can see price pull back to our what was support as resistance, and then it fell. Then it fell. Okay, so we're going to put the Fibonacci 2 back on the chart. By default, it comes on the chart as yellow. We'll go to the property section. We go to the levels. We could change the yellow levels. Let's say black. We can make the line thicker. Okay. So we can see clearly. Also, what I want to show you is how you can change the levels, because on this one, we have our level as level 27. We have our retracement level as level 27, extension level 27. I'm going to show you how to modify it. If you want it to be 23.6, you can make them any level, any amount that you want, but by default, these are the common levels. But 23.6 is a level that is used. So what we do is we'll come to the levels tab. Let's go back out. We'll right click on the chart, go to indicators list. You got your zigzag on here, and you got your Fibonacci retracement indicator on here. Go to properties, and we go to the inputs tab. And right here, set levels to use. We have the indicators levels, okay? And in here, separated by commas, are the different levels that we have in here. So we get right here, we say 0.27. That's the 27 retracement level. And then you got the negative 27, which is the extension level. So the negative number is the extension level. The positive number is the retracement level. So we want to change this retracement level to 23.6. We'll just change it to 0.236. Then put a comma. And we want to change the extension level to negative 23.6. We'll just change the negative 0.27 to negative 0.236. And then we'll hit OK. So, got to make sure we put it in here as well. And what it will do, it automatically update it. So you have your 23.6 right there, percent extension level and retracement level. Okay, so that's how you'll modify your levels if need be. But for the most part, you can leave them as they are. Okay, so here we have price fell down. Now, if we were measuring it, we can measure and we can see that price pull back to the 50% level. Okay, hopefully it's not too small. Price pull back to the 50% level, which is in our golden zone. Okay, so we have price falling down. Let's change the red bar to aqua so we can be able to identify it. Okay, direction. So price is falling down, pulled up between our 50% and 61.8. Rejection, rejection, rejection. Signaling that it wants to go down. Where could it go down to at the point between our 50 and 61.8? Okay, it could pull down or push down, I should say, back to the zero level, downwards to the negative 27, which is the key target point. And if it was past the 61.8, we could consider down to the 61.8. Okay. And it still may push down to the negative 61.8. But just to be safe, you can trail your stop. You can leave your trade open. Otherwise, it could hit your stop loss and still be in profit. So price pushed down to our 23.6 or 27, whatever you have there, down to, if we zoom out, you can see this. We marked our levels of support and resistance back here, and got to squeeze it up some more if we can get enough. Okay, so back here is where we marked these levels. And right here, you can see price pushed down, price pulled back, price found some support at this level. Our TP was smashed at 23.6. Price bouncing around. This is a key level, where price pulled back to. And price pushed back down to our 23.6. Now, if we were to use our close of price, you can also see in here where price was using our levels. Pulling back to the 38.2, down to the 23.6, down to the 61.8. Right there before it started to pull back. And it only pulled back to the 23.6 area and pushed forward, meaning that it was a strong downward trend. Doesn't get beyond that and continue to push forward. It's a strong downward trend. And this level right here was where price was breaking out from again. So this run right here, price was breaking out from this level right here. And all you would have to do is use your zigzag to mark the top and the bottom. You can see price pushing down, breaking past this level, pulling back, right? Between that golden zone area again, between that 50 and 61.8. And then down to our 23.6 or 27. So this was just to confuse you. This area right here was the pullback. So price pushed down from there, pull back up to there, and then down to our 23.6, 27. So that was the move. And as you can see, price pulled back, pushed down. There was no a step through over here. So we can see this. All you gotta do is follow the zigzag. Right here at this level, this is where we were seeing price breaking out. And I know it could be a lot of lines, so I'm going to just delete all the other lines. Let's just save the green so we can see it clearly. Okay, so let's also see the breakout. Okay, so price broke out right here, past this line, which we were measuring, to the pullback of 38.2, and it got a reversal signal to push down. TP at the 00. And then price pushed back up. That's your sign that price is not trying to go further. And it came back down. Again, that's so similar to up here. Multiple times of rejection, especially when it pushed back strongly. It got down after your zero, it pulled back, and then it got to your TP1, and then it pulled back significantly. Okay. And then it found support again at the same key level. That's how your Fibonacci is considered for support and resistance levels. Came back to this finding support there. Okay. So therefore, we do nothing. We stay out the market. We looking for another breakout. This isn't a significant breakout down here. Want a nice long run that we can clearly see. Well, the next time we see a nice long run is price pushing all the way up here, breaking out past this level right here. Price reversed and broke out past this level right here. Okay. So that's an indication. That's an impulsive move. That's a breakout move showing us that price could potentially be looking to continue to go up higher. Okay. This was a resistance level identified as support, which was a key level. And price broke that resistance and came back and found it as support. We would flip over our Fibonacci indicator to measure that retracement. We got the breakout, we got the retracement, found support at this key level, which is 50, trading up to the 23.6 or 27. And when that happened, what did we do next? We identified this as resistance to see if price would pull back and find support here or support here. Price made a little marking in thin air right here that you can look for as well. But price pushed up, pulled back, and went to its TP. And what we would do is we can now come over here or where price had its run to break out through past this level. Could mark the high or mark the body to measure the retracement. Not going to make a difference between that golden zone. It made it to that golden zone area between our 50 and 61.8. Start looking for that reversal. And with that reversal, what could we trade to? To our 0 or to our 23.6. We don't know if it's going to go up there or not, but that's the move. We broke structure. Look, we broke this high right here. That's clarity. We broke this previous swing high, swing low. Okay. And we got a higher high. We have multiple higher highs. Okay. What did price do? It pulled all the way down to our swing low. So I want to have our stop loss below our swing low. And then it went up. Then it went up. So when price was pulling down to this key area, it did push up some and it got rejected. It fell back down. And we know price, just like we experienced over here, it can come back down to this 100% mark. And our stop loss could be at this 110% below our swing lows, swing low. And then we didn't get stopped out. Okay. And when you really get comfortable and used to it, your confidence will be built to say, okay, well, it can be scary if you use proper risk management and this was your stop loss and it was 1%, 2%, 3% in your account, nothing to worry about getting stopped out. But you should actually be getting excited if you know that, okay, price wants to go lower because it didn't go higher. But I know that price broke past this level of resistance. I'm getting higher highs and higher lows. We're going up. We broke a previous swing high on our downward structure. Price is pulling down, seems scary, but it actually is putting you in the best position possible for a buy trade. Many are getting out, many are starting to sell. Where you have your charts marked up correctly, you know that this is 100%, is getting close there, but imagine just taking a chance and just buying after seeing where it got to and got a reversal signal. Still having your target at this 23.6. That would have been all your money right there. So that's how you continuously step through using your zigzag indicator and your Fibonacci indicator to consistently place profitable trades in the right direction. You're trading in the right direction. You need to go to a higher time frame in order to get the direction correct because there's a lot of volatility, false signals, and misdirection on the lower time frames. Now, you can very well mark up your charts, which we recommend all the time on the higher time frames. Wait to price to get to your key level areas that you're looking for and go to a lower time frame for your earlier entry because these are 4-hour candles. Okay. So on the 4-hour candles, you could be getting profits on a 30-minute candle that's within that 4-hour candle. Let me show you what I mean. Down here, let's highlight this area down here where we wanted to consider taking a trade. We're going to jump down to the 30-minute time frame and zoom over. Okay. Zoom in. Now down here, we have price falling. And usually when it happens, when price is extremely bearish or extremely bullish, moving to the downside or to the upside, that's really when price is looking to reverse. Many believe that it's time to jump in on that candle and trade because price fell so much. That's really when price is looking to reverse. Okay. Price only continually goes steadily in one direction when you have these smaller candles. Okay, large reversal, large bullish candle, and look, smaller candles do it because it's a reversal after that. Okay, so now this pin bar down on the 30-minute time frame, this pin bar followed by another bullish candle. Let's move this out of the way. Followed by another bullish candle, another bullish candle. Price pull back, still engulfing. All of this down here is your indication of a reversal. Now, I'm going to highlight this area. This is where price engulfed that candle right there. And even up here. And if we go back to the 4-hour time frame, you can see down here where we would have been entering at on this candle. Okay. Before we even got to the top of this candle to consider trading right here. So that's just an example of how entering on a lower time frame at a key level for a reversal could give you an earlier entry. Now, on a 4 hour time frame, what we would do is we would highlight this box, this bearish candle, to be the low, and we're waiting for price to break out of it to signal and to indicate to signal to break out that it wants to go up. We got a retracement, and now price is pushing up. That's our clarity that yes, price is finding this level, this area as support. And now it wants to continue to push up. Other than that, price kept engulfing and falling and falling and falling. Okay. Being engulfed by bearish candles. So hopefully this was nice step through. We're going to do two more things. One, we're going to look at where price is at now and just ask yourself, based on what you've seen today, what you learned in this video, if it had enough value in it and clarity, we stepped through a number of times, whether we were in an uptrend, whether we were in a downtrend. What could we say about what's going on right here? What would we do? What will we do? Think about it for a second. I'm going to remove all these lines. What will we do? So now, instead of you just looking at what we can already see, we can see based on the zigzag, what has happened. But based on what you've learned, what we studied, what we stepped through, what would you do? Okay. Step one is you want to identify where was there a breakout? Where was there a breakout? There are a couple of areas where there are breakouts. Okay. And you also want to identify an overall direction. Now, we might be too close onto the charts. You got to zoom out. We got to zoom out to see, because even though this looked like it was going up, if we zoomed out, price could have been falling down, and this could have been a lower high. So are we experiencing lower highs and lower lows, or are we experiencing higher highs and higher lows? It looks like we're experiencing higher highs and higher lows. Okay. So what we will want to do after we got clarity of what direction price is traveling, we want to grab our Fibonacci tool and we want to position it so our diagonal line is in that direction. Okay. Now we want to identify breakouts. Now, immediately you might jump to, let's say, this area right here. Say, oh, it broke out right there. And let me wait to see what price do for a pullback, which you could do. But let's step to that level. You want to step to that level so that you can build your levels of support and resistance along the way. Okay. So another area where price broke out was, let's say, right here. Price was coming down and it broke out. It was trying to identify which direction was going, because we started to get these higher highs and we found support right here. Okay. We had some support down here and price broke out. As we can see, price broke out from here. It actually was this level right here. Broke out from here. It pulled back. First up, pull back, rejection, pull back down to here. Okay. So now we got this 100% pullback from up to here to down to here. So essentially, we're looking at this right here, down to here. And that will be 100% pullback. This likely to be, wow, 23.6, 27, level would be. We drag out over there, and there you go. Price is pushing up. We got the direction because we can see we're getting higher highs and higher lows. Okay. So now we see that price pushed up. We got a breakout right there. We got these key levels right here. Therefore, this is a new resistance level that you want to mark. That price can find support at. As you can see right here, if we move this Fibonacci out of the way, even right here, price rejected at this level as it did right here. So this is the key level. Lock it in. Okay. Now right here, where we had this 100% pullback, we know that price can make it to the 61.8, which it has. So that is what actually happened. Price pushed up, broke out from this area of resistance, pulled back. It pushed up and had to pull back to go higher. This was what they call a liquidity run. So it could push up higher. It had to go and take some money for those people who had their stop loss, anywhere along this level, looking to get to the 61.8 when price reverse. That's why it's key to only go here. You control your stop. See if it goes there. You got a reversal. It's time to get out. And then price went all the way down here. Also, people got into buys right here when price went back up. Very bullish. People got into buys right here. But there was a level of resistance right there that you had to be mindful of. And then their stop loss got hit. Okay. So price made up here, essentially, if we wanted to make an adjustment, again, the Fibonacci is flexible. If we wanted to use this run up here, we see price came down. This was a wick. It did not break the swing low. Okay. Actually came to this 10% and went to 23.6. And at that point, this was an area of resistance for sure. It pushed price all the way down to the bottom. And now you have a level where price could be supported. And you will be looking for the run where price broke resistance and waiting for the pullback and reversal. So far price is rejecting down here, potentially could push up, in which we would, again, do what we did before. Look at our run from where that push price through to the breakout. Lock these in. All right, so price pushed up. We found our zigzag line. Price is pulling back. We got our key levels of support and resistance. So far, looks as though if we zoom in, price is trying to make up its mind which way it want to go. So far, it has pulled back to the 23.6 with a wick down to the 38.2 with the potential of coming back up here to the 0. Right now, with the way price is moving, I would do nothing. We want to have clarity. We want to have clarity. Yes, price has broke out, has here, and has pulling back. But right now, as far as we can see, we're having lower highs and currently lower lows. So it's pulling back forming a down structure, which could just be a pullback, a major pullback, and then price push up, but it's losing its momentum. We would expect price at least get to a double top right here. And we just got to wait and see. So there's a time to trade and there's a time to do nothing, but be patient. And once you got the clarity, you'll see that it pays to be patient. Initially, when we first looked at this side of the charts, you were going to put your resistance level right here, just going right to this breakout. It's not necessarily anything wrong with it, but as you can see, when we started to the left to start to build our support resistance level, that we actually ended up identifying this as the resistance level, of price, and this as a resistance level of price that it rejected. So it's really an area. It's not just one finite point. It's an area, price rejected, and push back up. Okay. So that's how you leverage the zigzag and the Fibonacci 2 indicator. That's a hack. It makes it easy peasy. Now, if you haven't obtained your Fibonacci indicator, by all means, you want to go to forexfundamentalspro.com, click Shop Indicators. Your Fibonacci indicator can be found here. The yellow one for MT4, the green one for MT5. Get your indicator today. We like to continually see you successful, and we also appreciate your support. By all means, leave a comment in the comment section if you have any questions. Until next time, we'd like to say thank you, and we'll catch you on the next one. Bye for now.